Hi all, this is a recording that's going to walk through the practice exam or mock exam question for Chapter 10. Again, a reminder, please try this question before you watch this video. Try the question, look at the solution that is posted, see what you've got, see what you've missed, and then watch the video just for things to think about and to help you through what you might have missed in the question. But it truly is the best studying to try the question first. So let's give the question a go. I'm sure you've already got it right and you're just confirming your answer. This is a pretty good question. It's quite comprehensive. It covers a lot of material from the chapter. What it is we bought a luxury apartment complex. We've got some fees as part of the purchase price. That gets included in the purchase price, so that's something from the chapter. We paid maintenance staff during each of the 3 years. Again, knowing this is an expense, it's not part of the asset, it's regular maintenance, so that's part of the chapter. We've got estimates of fair value at the end of each year end, and we're using the fair value method for its investment properties, so that's part of the chapter. That's part A. We're going to do a bunch of journal entries for 15 and 16. And in part B, we're going to do 17, assuming instead that they use the revaluation model. So again, another topic from the chapter. So recording an asset, understanding what the costs are that go in it, applying the fair value method, and applying the revaluation method. And you will notice this question is worth 16 marks. On an exam, it'd be worth about that. And so just from a guideline point of view, typically on an exam, you have a little more than a minute per mark. So you should be able to do this question in somewhere between 16 and 20 minutes. And you'll see there's not a lot to it. If you're just typing in the journal entries and doing the calculations, it doesn't take that long. But if you have to look stuff up and if you put stuff in and change it and redo it, you're going to run into time issues. So, part A. Prepare all required journal entries for 15 and 16. So if I go back to the test, I see I bought this asset in 15. So that's a journal entry I'm going to want to do. This is part A, 2015. Okay, and on your exam templates, I'm going to have everything. Actually, let's just do the entries. So on the first one, I have acquired an asset. I have paid $10 million for the asset. I paid $150 in transfer fees. That's part of the cost of acquiring the asset. And $20,000 in legal fees. That's also part of the cost of acquiring an asset. So I'm going to debit my asset for $10,170,000. And in this one, I'm going to call it investment property. That's typically what they call it in the book. If you want to call it building or resort or something, I'd be fine with that. And it's the total of all three. If you wanted to do all three as separate entries, I guess you could, but it would be a significant waste of your time. I'm going to format everything here as on your exam templates with commas and no decimal places. You see it screws up the date, but I don't care. And I paid for it. Okay, so that happened in 2015. I also paid maintenance staff in 2015, $93,000. So paid, cash out the door. And again, just demonstrate, I know that this is not a building cost. This is maintenance expense. It doesn't add to the value. And then I have a fair value year end of 9.1 million. So I'm using the fair value method. The fair value method says every year end, I'm going to adjust this asset to its fair value. I'm going to do a T account just because I find it an easy way to follow. On an exam, I wouldn't if I were you, and unless you're pretty adept at Excel and it's a nice way to calculate it. So investment property, I initially recorded it at 10,170,000. The end of the year comes along, and I need to adjust it to 9.1 million because that's the fair value. So 10,170,000 in the account, needs to be a balance of 9.1, so I must need to make a credit here of the difference of those two. Okay, fair value method, adjust the investment property to fair value. So I've got a credit, investment property. Don't be afraid to abbreviate a bit if it's quicker. And it's this 1,070,000. And any other thing I need to know, if I'm using the fair value method, this is just a gain or a loss. So loss on fair value. Loss on investment property, loss on, have the word loss in there and you're fine. Okay? That's it for 2015. Again, watch the question, make sure you answer it. It says we want all journal entries for 2016 too. So, what do I need to do in 2016? Well, I didn't buy the property in 16, so I don't need to worry about any of this first stuff. I did pay maintenance expense in 2016 though, so we better record that. Again, use Excel. I can copy and paste, and then I don't have to type all this again. I just need to change the amount to, it goes 107. Yep. And then the fair value at the end of 2016 is 10.9 million. I'm using the fair value method, so I need to adjust that as well. So let's use our T account just for demonstration. I need to adjust the account to 10.9 million. So what do I need to record? Well, it's whatever the difference is. So it's the same entry as this, only now I'm debiting the investment of property because it's gone up in value. And obviously I don't have a loss, now I have a gain. And if you just use the word gain, quite honestly, I'd be fine with that. If you can't type investment right and you put an extra W in, that's okay too. There aren't marks for being pretty. So that's part A. I'm not going to do the 2017 entries because the question didn't ask for them, therefore there's no marks for them. Part B is, assume instead we use the revaluation model and that the first revaluation is done on December 31, 2017, value is above. So revaluation model, if we remember, I'm just going to adjust the asset to fair value on a regular basis. Probably not every year end because it costs money to do appraisals, blah, blah, blah. So if I'm using revaluation, I'm just going to do it occasionally. So at the end of 2017, I need to adjust this account to 11.7 million. What else does it tell me? It says the balance in the building's accumulated depreciation account is 715 and 2017 depreciation of 410 has not been recorded. So what that is there for is you can now demonstrate that you know, hey, if I'm using the revaluation method, I need to record depreciation every year. So this 410,000 that hasn't been recorded, I need to record it. My entry for depreciation is always the same. Again, I don't mind abbreviations, and let's do a T count again. Again, you don't need these, and you certainly don't need to make them look pretty, but if it helps you, throw them in. So they told me the balance was 715. I need to record the $410,000 for the current year. Again, part of the demonstrating your knowledge here, accumulated depreciation is a credit balance, always, right? Oops. So that's what we have so far. Using the revaluation model method and the way we're doing it, every time I do a revaluation, I need to change the accumulated depreciation account to 0. Right? I'm resetting and starting over again. Again, what do I need to do that? Well, I obviously need a debit for that plus that. Right? That way my debits equal my credits and I got a 0 balance. So I need a debit to accumulated depreciation. And there's different methods of doing this, but I certainly find it easiest to put this in your asset account. And we could call it investment property. I'm going to call it building here just because I'd be fine with either. So now if I look at my building account, I'm going to do another T account. So my building account, I started with the 10,170,000. Right? If I had been using the revaluation model, my cost is still the same. Over the past 3 years, I haven't done anything to change the value of the building. I haven't added to it. But now I come along and say, I'm going to book this credit. But now I'm revaluing it, and I want the building to be $11.7 million. So what do I need to record to get the balance from where it is to where it needs to be? And however you need to do the math here, but if we go through this way, $2,655,000 is what I need to record to this account to get the balance up to $11.7 million. So I need a debit to my building. And then the credit here is kind of an oddball, weird named account. You're just going to have to memorize, I think. It's called revaluation surplus. And it's an OCI account. And we will spend more time on OCI accounts when we get to the income statement chapter. But for now, just remember that's the name. Okay? So that's the revaluation model I would do every year. And it's not part of this question, but ongoing, if I had to record depreciation next year, I would now record depreciation based on a value of $11.7 million and however many years I have left in the life. All right, hopefully that helps. Very comprehensive question. If you can get through everything in that question, you're in great shape for the exam. Thanks all.